Welcome to the Commonwealth Home Ownership Podcast, the real estate investing podcast for Canadians. Whether you're a seasoned investor or just getting started, you've come to the right place. If you're looking for a way to take control of your life through real estate investing, stay tuned and be sure to join us at cwho.ca, your hub for all things real estate investing in Canada.
Hey everyone, welcome to another episode of the Commonwealth Home Ownership Real Estate Podcast. For today's guest, we have Diana Irving. She has over 20 years of experience in the bookkeeping and accounting industries. She has numerous certifications in bookkeeping and integration software, including being QuickBooks Online Advanced certified. She is a member of the Certified Professional Bookkeepers Association of Canada, and she continuously educates and keeps up on new accounting principles and software. She is also currently working on her CPA designation. For more information about Diana, you can reach out to her via her contact information in the show notes below. So for today's episode, we go over the importance of having a good bookkeeper as a real estate investor, especially if you want to bring on investors. We also look at the time and cost savings of having a good bookkeeper, the best questions to ask when you're interviewing one, and so much more. Let's jump right in. Welcome to another episode of the Commonwealth Home Ownership Podcast. My name is Phil Wong. With me as always is Brad Price, and today we have Diana Irving joining us. Hey, Diana.
Hi, thank you for having me.
Thanks for coming on the show. So let's get into it. So Diana, actually for anybody, not just real estate investors, but for real estate investors in general, specifically, why is a bookkeeper important?
Okay, well, there's a lot of key factors as to why bookkeepers are important, right? In any type of business that you have. I think a lot of it is time value and benefit on your time. So that you can focus more on running your business and not be so worried about the numbers, right? The bookkeeping can also help you put together your financials, get ready to do tax planning with your accountant. You have real-time numbers going on, especially if you use a cloud-based software, so that you know month to month where you're sitting at, looking at your income versus expenses, your cash flow statements, those type of things. They can help you run your business much smoother than you trying if you're doing it manually, spending countless hours sorting through receipts. It's a really big time factor. Also can help you get ready for your year ends with your accountants.
Okay.
So Diana, how does somebody go from, say, like you said, doing it manually to then automating their bookkeeping? Like, if somebody's listening to this thinking, goodness, I've been running my business for however long, and maybe they're in a trade or something like that, and they're less in the office, more out on site, and paperwork's maybe not their strong point. Computer stuff is not their strong point. How do you get someone like that to move towards a little bit more of an automated setup?
Okay, well, it's especially with COVID, it's first start off as a Zoom meeting, right? And we use different software that is cloud-based. Okay, so it's in the cloud, very, very user-friendly, and easy to use for someone that isn't that comfortable or techie savvy. There's also integration packages and systems that you can use that make it much easier. So in simple terms, is take a picture of your receipt. If you're out on a job site, take a picture of the receipt and it automatically goes into your books, where your bookkeeper can put it into the right categories, right? So it does alleviate a lot of the paperwork that way. A good bookkeeper will also work with you on doing some tutorials, helping you feel comfortable within that software, teaching you how to, where to look for reports, how to use, if there's a phone app. There are other integration packages like Receipt Bank and HubDoc that some companies like to use. Those also help to forward receipts and make it a little bit easier so that you can be more comfortable with it and not spend so much time at the end of the month or compiling everything in a box for your accountant at year end.
Yeah, I think that's a key takeaway, is that you're not compiling stuff into a box anymore. Those days are pretty well over.
Well, they are, right? And then there are other avenues that you can use, such as OneDrive, Google Drive, Dropbox, to store some of those more important documents, right? So that you're not having big filing cabinets of those, or worrying if something happened, you don't have access to those documents anymore, right? So there are different areas and different softwares you can use nowadays that really help you to be able to spend more time working on your business and outgrading clients and making those sales than actually sitting in the office and trying to thumb through and figure out your expenses.
Okay. So in terms of looking for a bookkeeper, what credentials or what questions would you ask a bookkeeper during an interview process when you're trying to find one that suits yourself?
Okay, well, first and foremost, when you're looking for a bookkeeper, you might want to ask other people in your field, right? So if you're a real estate investor, you might ask some of your partners or JV, well, who do they use and why, right? Another good person to ask would also be your accountant, right? They may have people they use. But if you're going out on your own, you want to be able to talk to them about, do they have any education in it, right? Like, are they certified in anything, right? Have they taken any accounting and bookkeeping courses, right? Have they ever worked for accounting firms? How many years have they been doing it? Okay. And also depending on your business and what you're doing, and especially you gentlemen are in real estate, do they specialize in real estate bookkeeping? Right? Real estate bookkeeping is very different from an engineering firm, right? Or a restaurant. It's very different in the way reports are done, cost analysis, tracking the specific homes, right? If you're doing renovation projects and things like that. So you want to ask them those types of questions, and perhaps a referral or two, some of their clients, are you able to talk to them, right? But number one, you have to be comfortable with them because you're giving them all your financial information, right? And you want to make sure that they're qualified to do it, right? And they do have that background and experience. And are they also continually taking courses, upgrading, right? Are they always learning about the new software that's out there, the new techniques that can help their clients?
What specifically would you ask? So let me step back for a second. If you ask a bookkeeper and you're interviewing them, you ask them if they're familiar with real estate bookkeeping or real estate investing bookkeeping, and they say, yeah, sure, absolutely, I can do that for you. What questions specifically could you ask them to be able to really know if it's something that they're familiar with from a detailed perspective?
Okay, well, you can ask them, let's say I have 5 houses and I want to be able to track each house, and do a cash flow, statement for each one, profit and losses. Are you able to, where would those things go, right? And what kind of expenses can I write off, right? What's the difference between a current expense and a capital expense, right? If you're doing real estate bookkeeping, you must know those things, right? And if I have a JV partner, what's the split in that? How does that work if I'm covering things, right? Do I give them a report, or can you do a report for me? What kind of report can I have, right? Or what kind of reports can you give me, right? And what's your time frame? Are you available to give me that every month?
I think that's a key component, what you mentioned there. If you are a real estate investor, or maybe you're just getting started in real estate investing, these are important points for you yourself to know before you go and employ somebody to start doing the financials on your investment properties. Because if you don't know and you're following somebody else is advice or recommendations, especially when it comes to capital cost or capital claims and capital expenditures, or claiming expenses incorrectly, that could be detrimental to your tax submissions at the end of the financial year.
It sure can. I had one gentleman that told me that he everything was on an Excel sheet, right? Everything, and had it all organized, and then he would just give it to his accountant, right? And so the accountant would do up the tax return, and on they went. Upon further investigation, he had a very large capital expenditure as repairs and maintenance, and it went through. But if he ever gets audited, he'll have a problem. He didn't know, right?
Yeah.
And because he wasn't using a bookkeeper, right? Or, seeking that advice, he just put everything under repairs and maintenance. And a lot of that wasn't, right? So his tax return was done incorrectly.
What happens in that scenario where, like, let's say for that gentleman, if he was to get audited, what happens in that scenario if you genuinely just didn't know?
It's fine, but it will be reversed.
Yeah.
If it's an honest mistake, that's fine, right? But it's incorrect, right? It is not that large of an expenditure. You can't expense it as repairs and maintenance. It would be switched to a capital expenditure. And then, of course, the profit would be much higher in that specific unit, right?
Mhm.
So he would probably, I don't know the whole tax situation, but he would probably end up owing tax, right? And then he has the option that's a home improvement, right? A leasehold improvement. Yeah.
So what, Diana, do you want to explain? Sorry, Phil, I'm going to just quickly
No,
jump
no,
on
it's
the back
okay.
of this.
Sorry. No.
Diana, do you want to explain for people out there what the difference between those two are, the expenses and the capital cost?
Sure. So a current expense is one that's reoccurring, right? Small repairs and maintenance, things that you do on, a monthly basis. If you had to a light switch got broken or some smaller things like that. A capital expenditure is more over the life term, right? It improves the building, so to speak. The one example I like to use is if you had wooden stairs, large wooden stairs going down, and you decided that you were actually going to replace them with aggregate, right? Beautiful aggregate going down. That isn't actually a capital expenditure. If a couple boards were wobbly and you replace the boards, that's repairs and maintenance. So you have to ask yourself questions, right? Like, what's the value of the expense? Is it $50 or $10,000, right? If you do a couple tiles on your roof, that's a repairs and maintenance. If you replace the entire roof, that's adding a big value to the building, right? And that would be a capital expenditure. So the Revenue Canada does give you lists, right? And if you are unsure, you can actually talk to them and get a ruling on it. But you do want to make sure that you understand, because there really is a big difference. And if you do make the mistake and you do get audited, they will reverse it.
Okay.
Right. So it's getting the knowledge and knowing what you can expense, and having a good bookkeeper will be able to tell you that and help you out with that.
Because from what I understand, as long as you're not changing the function of what you're repairing or replacing, it's still considered a repair, correct? But I guess there's some gray lines in that too, because
There is,
because
right?
a roof, technically you're not changing the function, but if you're replacing the whole roof, that would still be considered capex. Whereas if you're just replacing the boards on a fence, that's still a repair as opposed to
an entire fence.
You're replacing the whole fence. Okay.
Yes. So if you are unsure, I always advise people, if you're unsure and it's kind of on that borderline, it warrants a call to Revenue Canada, right?
Okay.
And then they can tell you exactly, right? Because there's also ones where if you're in the middle of doing a renovation, right? And then all of a sudden you get an offer on the house. So in the middle of all that. So is that really, a capital expenditure, or, can you expense that as repairs and maintenance? So there are fine lines on time, and then that relates to timing, right? It's all in the timing of when offers come in and things like that. So those are ones that you really would put to Revenue Canada, because you want to ensure that you're not doing it incorrectly.
Yeah, and to tie.
So even a good bookkeeper couldn't, they may be going, it's nothing to phone and find out, right?
I think you also have to tie that in with when you're doing or when you're depreciating a building. So to fully understand what it is that we're talking about here, the expense versus a capital improvement. So like you said, Diana, if you're improving the property, essentially if you're increasing the value, that's really what it's going to come down to. Because on the opposite end of the spectrum is if you're claiming depreciation, if you're claiming that building sitting on that piece of dirt on the land is falling apart.
Yeah. And that's one thing you need to look on your taxes also, right? A lot of people don't realize that they can actually depreciate the building. And that is something that you need to discuss with your accountant, because that decision, of course, will affect the long term when you go to sell. Right? If you have a building and you decide to start to depreciate it on your taxes because you want to pay less amount on your taxes, the bigger picture, of course, is going to, when you go to sell it, is your gain or loss higher. So by having your books in order and everything organized and ready to go, you can make those decisions ahead of time, right? Before your year end. That's also a very good benefit of having a good bookkeeper, right? If your books are all on time in November to October, you can start to do some tax planning with your accountant. You have all those numbers ready to go, and can say, this is about what I'm going to make, right?
That's a perfect segue. Let's actually dive a little bit deeper into depreciation. When is it a good time? I mean, I know there's something to place your accountant, but just in general terms, like, first of all, what is depreciation, and when would be a good idea to depreciate a property, and when is it a bad idea to depreciate a property?
Well, that's That's up to the individual. That's
Okay.
not up for a bookkeeper to decide.
Okay.
They bookkeepers don't decide that. That's
No.
you and your
No.
tax accountant in tax
Yeah.
planning.
I could probably jump in on that. So, for example, if you're somebody that has a 9 to 5 and you earn, I don't know, say $100,000 a year, but you also own real estate, and I don't know, maybe you have some other forms of income. So when you get to the end of the year, if you get hit with it, if you work through your taxes and it looks like you're going to get hit with a tax bill, you may be in a position to depreciate a property that you own to potentially offset some of the taxes that you may have to pay based on your whole financial situation for that year.
Mm-hmm.
Now, you might be in the opposite scenario where you've earned less for the year and you may not depreciate a property because there's no taxes to offset. I mean, there's just two simple scenarios
Yeah.
that you may or may not need to depreciate a property.
But one question for you, Diana. If you start depreciating a property in 1 year, can you not do it the next year, or is that something that has to follow through the year after year? Okay, you can.
Doesn't have
Okay.
to follow through. No.
But then
there's
if
a
you
set
were
percentage.
Yeah. Then where then the downside is if you were to sell, then you have to pay those taxes back, or that depreciation back on the back end, correct?
Well, no, if that's the value of your building. So if you were depreciating away, let's say you bought it for 300,000 and you kept depreciating it, whatever the end result is, that's the value that goes against what you're selling it for. So your capital gain will change dramatically.
Mm-hmm.
And you cannot depreciate to create a loss. Remember that.
Yeah. Okay.
You can't depreciate past to make a loss on your properties. It's not allowed.
Yeah. Sorry, go ahead, Diana.
No, I was just going to say, so a lot of people don't bother with it. They just don't. And that's something that, as you say, Brad, you have to look at the big picture. So if you're going back to hiring a good bookkeeper, if your books are all up to date, right, in a timely fashion, then you can start to sit down with your tax accountant prior to tax season and do some tax planning and make some decisions before the year end hits, right, which is important.
Mm-hmm.
Yeah, absolutely. I think that's key, is understanding your total situation.
Yes. Yeah.
And if you have multiple things going on, and just kind of being aware of what you can and can't do. But just for people that may not be fully up to speed with depreciating a property, as Diana is essentially alluding to there, if you're saying that building is worth less every year, you're depreciating, you're saying that the condition of the building is degrading, essentially, is what you are saying. But you get 5 or 10 years down the road and you sell it and it's worth a lot more than what you paid for it. Basically, the government is going to the CRA is going to look at that and say, hang on a second, you told us that building was worth less and less and less every year, but you just sold it for X amount of capital gain. They're going to say, hey, you've got to pay us that money back. But in very simplistic terms, that's it.
Mm-hmm. So,
and that's something you would discuss with your tax accountant, right?
For
Who's
sure.
doing your taxes.
Like, so for example, if you would buy a $400,000 building and then 10 years later, it's worth quote unquote $300,000 because you depreciated it, but you sold it for $500,000, then you have to pay essentially $200,000 of capital gains, or you consider you made $200,000 of gains. Will that be correct? Or how the government would look at it if you were to do it that way?
It depends if you got audited. You're not paying it back though. You don't. You're allowed that tax deduction on your tax return.
Mm-hmm. Okay.
Yeah.
Okay.
Yeah. You don't necessarily have to pay that money back when you go to sell it. You're going to get hit with the capital gain of the difference of what the value is that you've stated it is to what you're selling it at.
Got it. Okay. Yeah, actually, I have a really funny story about a real estate investor who didn't use a bookkeeper and didn't know how to partition his expenses and capital gains or expenses properly. So he actually had a condo, and without he was actually feeding every month. He was like losing about $200 every month on this condo. And then he had condo fees, but he didn't know where to put, when he was doing his own taxes, he didn't know where to put the condo fees. So he just left them out.
Oh, goodness. Yeah. Yeah.
You can probably see where I'm going. So then when he filed his taxes, it looked like he was actually making a profit on his condo because didn't include the monthly condo fees. So then when he got his tax return back, he was actually owing the government money because it looked like he made money, even though he was losing $200 every month. So just to highlight the importance of having a good bookkeeper.
Having a good bookkeeper, knowing what expenses you are allowed to use against that income, right?
Mhm.
That's very important. Yeah. So yeah, come across that sometimes, right? People just need to know, right?
Mhm.
And again, it's making sure you have all your ducks in a row, making sure you have all your paperwork ready, and by using a bookkeeper, they'll help you get that all in order. So like I say, you can spend more time working on your business, not in it, in that sort of sense, right? In that
Mhm.
paperwork. Yeah.
So, sorry, Diana, that's a quick question. I understand that you don't accept everyone that just comes to you with a box of papers and say, please be a bookkeeper, correct?
Yes, and most bookkeepers won't. No, they're, because it has to be a good relationship,
Mhm.
right? And you have to have a fit because again, you're giving them all your information, right? And some companies you may not want to do, right? Different bookkeepers want to keep their specialty into one area. Some companies are very convoluted. They have a lot of different things going on. So it all depends. You have to have a fit for both.
Okay.
Right? Because you're working together, you're speaking with each other, every week, every couple weeks, going over everything. So really, you have to have a good communication level and a good trust level with your bookkeeper. It's really, really important. Yeah.
So what is something that a real estate investor can do to reduce their chances of being turned away when approaching a bookkeeper if they really need one?
Okay, well, I mean, it's not necessarily always being turned away. I think if you find a good bookkeeper, they'll have systems in place,
Mhm.
right? And if you can follow those systems and willing to work within those systems, then you will have a great relationship, right? I think the more disorganized you are, and the lack of communication make it very difficult for bookkeepers, right, to get the work done. So to work well with the bookkeeper, you have to try your best to be organized, and then following some systems to help you get better organized, right?
Mhm.
And communication is key. And one would think you'd want to communicate a lot, right? You want to be hands-on in your business, right?
Mhm.
And know what's going on. So the more you do communicate and the more organized you are, the more efficient and faster your bookkeeper can get your books done every month or quarterly or however you organize it with them. Yeah.
Okay, so the bottom line is you shouldn't abdicate your responsibilities to your bookkeeper, correct?
Exactly, right? I mean, I think the key thing with a lot of bookkeepers is chasing the clients for information, right?
Mhm.
If you can provide it in a timely fashion, then it'll make it much easier to get your financials, right? And your numbers, on a regular basis, because they'll have all the information and all the data that they can put together for you.
Mhm. So yeah, from my experience, it's definitely not I think a lot of real estate investors are kind of expecting the bookkeeper just going to handle everything, which is not really the case, right?
No, you have to discuss what you want them to do,
Mhm.
right? I mean, and there's a difference between a data enter and a professional bookkeeper, right? A data enter can just plug numbers and put them wherever, and hopefully it's in the right spot, right? Or data entering, you give them a list and they'll punch it all in. If you have someone that actually has the experience, they're going to know exactly where to go. They can give you some advice and say, and if they're tracking properly, then they can say, well, hey, wait a minute, this number doesn't match. Like, why aren't your leases matching? Right? Or I noticed this expense, like that doesn't look right. Or you've got a duplication, right? It looks like you got charged twice for this. Did you know that? Right? So a good bookkeeper is going to catch a lot of these different things that you may miss, right? And it's important to have one that does that type of thing, right? To say, well, you know what? I don't know if your tenant paid because this amount didn't come in that month, right? And if you're busy, I've seen where people miss it, right?
Mhm.
So that part is really important. And again, that goes back to the communication, right? And hiring someone that knows what they're doing.
Mhm.
I think detail orientated is a good one as well, because
Very much so.
I think about situations in the past where I know one of my accounts, Diana, was 3 cents out for a while, but we had a note in our communication channel that I had to make on one of the deposits. I had to add 3 cents to it, and eventually I was waiting. I had nothing to transfer, but when we got there, it was like, okay, I remember that 3 cents. Now I will do that so the book's balanced. But I mean, it's key to get to a net zero, to a balanced set of books.
Yeah.
No.
And some people may say it's silly, but when you're reconciling a bank statement every month, right, and it's off, either overpay or underpay, then it's like, okay, where do you want me to hold that, right? Like, you're not matching. You overpaid by this amount. And as you know, to reconcile a bank statement, it must match to the penny, right? Otherwise, you have to put it someplace, right, until you're ready to do that. So it is very key, right? And Brad, that 3 cents was a stickler for a while.
I know.
We got it done though. We
did. Yeah, we cleared up the big 3 cents. Right?
Oh man, I remember we had $6 off, Diana, and I was searching high and low for where that $6 went, and it took me. I mean, it was brutal. It took me weeks, but it's good. I'm glad you're riding me like Seabiscuit on that $6.
I know some people think, really, it's $6, but if I can't balance a bank statement, where do you want me to put it? Right? It's not. Is it bank fees? Is it expense for a property? It doesn't sound like a lot, but imagine if it were bigger expenses. Yes. And you didn't know, and you weren't tracking them, or you missed them, like the gentleman that you knew with the condo fees. He missed all those expenses. So sometimes if you're tracking manually, you are missing those things, right? And you're busy with other work. You're not paying attention to all that detail. So it's worth spending the money on getting a good bookkeeper that can do all that for you.
And in terms of tracking manually too, I think in terms of this, you speak of tracking manually, I think it's also important to have a good software system, in my opinion, as well. Just
Very
because
much so.
Spreadsheets can get you so far, but they do have their limitations.
Well, they do. I mean, if you're putting things on Excel, that's great. You're tracking everything, but then you have to compile it all so you can see what your profit and loss is or what your cash flow is, right? And you're trying to pick numbers here and there and do it all manually. There are a lot of good cloud-based, accounting softwares that you can use that are very user-friendly. So someone that isn't comfortable, or isn't comfortable with a computer and that, there are ones out there that your bookkeeper can recommend for you that are very user-friendly, right? And with a little bit of a few tutorials and training, you can feel really comfortable understanding, how everything works together and exactly how you can get all your paperwork into the system rather quickly.
I think so I just want to make a point here. I think is really, really important for anybody that's contemplating or already doing joint venture real estate, is that, if you're working with somebody that's like, oh, don't worry, your books are only off by a couple of dollars sort of thing. Like you have to be able to report accurately to your joint venture partners and be able to explain to them the transactions and the numbers for every single item on every statement at every, whether it be quarterly interval or a monthly. Like it's just so important to have that done correctly. And I really cannot emphasize that enough, because we've been in that position where we get asked these questions. And to be honest, it doesn't matter what the dollar value is. It's actually, it's not even relevant. It's not even important. It's really about the transparency and being able to answer the question. And if your books are out and things don't balance or match the statement, people have questions, or joint venture partners or investors, they have questions, and it's not a good spot to be. So I appreciate 100%. It.
And one thing I find that a bookkeeper does that you don't really realize it now, on top of the professionalism, on top of the time savings, is it keeps you accountable on a monthly basis, right? Because a lot of times if you're doing your own books, you kind of leave it for a couple months, 2-3 months before you touch them. And then by that point, you might not remember what all the transactions were. Whereas if you have to review it on a monthly basis, it's much easier to remember, what that transaction was, what that expense was. You'd be able to find that receipt because it's not buried under, 1,000 other receipts.
Yeah. So and that's twofold there. I agree with that. There's twofold for that, is that you're seeing exactly where you're at every month. Right. And again, that can relate to making some good business decisions. If you're coming to November, should you buy that bathtub and that unit because you got a big profit, or should, depending on your cash flow, no, I can just push it to the next year, right? So that gives you, you can make those kind of decisions when your books are up to date. Another reason is if within your business, depending on what your business is, if you have GST, right? And GST, pending if you're filing quarterly, you have to have your books done, right? You must have all your ins and outs for your GST to file it correctly. So, on the side of that, depending on the company or whatever you're doing, if you have GST due, you have to be able to have all of your income and expenses completed in order to file your GST return. Yeah. So It just leaves everything neat and tidy, and you're not unknown as to where you are. And as Brad said, for JV partners, it's extremely important to be able to produce those statements. A lot of the softwares now have templates that you can actually do beautiful statements. You can pull, if your bookkeeper is tracking everything correctly, you can put 10, 20 properties in one set of books and produce, 10, 20 different JV statements. If you have that for your, you can have your profit and loss, your cash flow, and everything else that can produce nicely, neat and tidy for your JV partners. Right, on a quarterly, monthly statement, however you have your agreement with your partners, right? And as Brad said, if it's done properly, you are not out a cent, and your investors aren't going to ask, because they'll know they'll see the cash flow, they'll see the income, they'll see all the expenses, and and it builds on your reputation too, right? That you are tracking everything perfectly. You're able to give them reports. It's going to make them want to invest with you again.
Well, I mean, by the time you accept other investors, you're really a business at that point, right? So you really want to exude that level of professionalism. You don't still want to send them a little spreadsheet saying it's like, these are expenses.
Yeah.
It just doesn't quite send the right message.
Yeah. Not only that is, sorry, Dana, they can see the statements too a lot of the time. Like if you've got a joint account with an investor, and they can see transactions, and you're providing a statement that does not match that bank account, that's just going to cause confusion and in all honesty, potentially distrust, even though you it's not intentional. It would likely create issues that are not warranted if you have somebody doing your books correctly.
Yeah, it does make a big difference, I think, right? It really does for an investor, that's looking at doing potentially more investing with you.
So how does how does having a bookkeeper make it easy? I mean, it's also, I guess one thing to say is it makes it easier for the accounting side too, right? So it's because you also save a lot of money on the accounting side. A lot of people forget about that bit. Just because having everything organized to send to your accountant, you can either be able to do it yourself now because all the expenses are available for you just input into a program, or B, the accountant doesn't have to put together everything for you at their rate versus.
Well, and that's true, right? You can have big cost savings for your accountant. A lot of most professional bookkeepers will be talking to your accountant, right? Every accountant likes things a little bit different, and you can supply to your accountant exactly what they want for your client, right? Exactly the format that they want it, everything neat and tidy for them. So the accountant actually then it can spend more time on helping you tax plan than worrying about whether or not your expenses are correct or incorrect, right? So again, the emphasis on hiring a good bookkeeper, that those numbers are correct, and your accountant is going to have to worry about that. They get to work on helping you tax plan and better ways to utilize your money after taxes, before taxes, etc.
Okay.
Right? That makes a big difference.
Yeah. So I guess to explain that a little bit further, it's as a real estate investor, and you're doing your books every month, and you get to the end of the year, you're not then going and dropping folders of paperwork for your yearly expenses for each property you own and maybe a business or whatever else, or a T4 from a day job. You're actually doing it monthly. Your books are updated for every month. You get to the end of the year, January rolls around, then you can, finish up for December. And then by the time everything is compiled and given to your accountant, like you said, then you're working on tax planning and actually submitting your taxes, rather than your accountant falling over because you've just given him 2,000 pieces of paper from the last 12 months. Because
Yeah.
I assume that's how it used to be, Diana.
Oh, shoe boxes, and literally that was the joke, right? A box, you got a shoe box, right? Or you got garbage. I remember years ago, I got garbage bags, right? And it was like, are you kidding me, right? But people
Were
just
they
threw
the big
everything in.
extra
Yeah.
large black ones? Those
Yep.
big.
Yep. Garbage bags, shoe boxes, whatever they could find, they would just stuff everything in. And then the amount of time that it took to uncrumple and go through everyone, that's where you see the old pictures of, the calculator going and the visor on and their glasses, and because that's what they did, right? Nowadays, with cloud-based accounting and doing it monthly, you're right, Brad. I mean, at the end of the year, you compile your profit and loss statement, put the values of the buildings, any asset, and you do that for each house, right? And then, you can drop it into, if you're sharing a drive, as I mentioned earlier, you can drop, all of those in for your client. They'll add whatever, other information they have on their taxes. And then that whole folder can just be, usually most accountants have portals or drop areas that you just drop your tax file in it. I mean, so much more simpler, right? Mm-hmm. Or you can do, if you're doing some pre-tax, you can do your January to November, right? Put that together and set up your meeting with them, and say, okay, this is where I'm at right now. Let's, I'm concerned about coming to the year end. What's advice do you have, or however you want to do it? But by having it organized and ready to go, it really simplifies the stress of so many people worrying tax season is here. I've got to get everything ready. You don't, right? You have your some things to do in January. You need your mortgage statements, right? If you don't have your amortization schedule, you've got to break out the principal and the interest. And the odd thing you want to review with your client to go over it to make sure, is there anything we've missed? Is there, make sure you don't have any receipts missing at all. Have a look about, right? But it does really take the stress off of the tax season for you as an investor or real estate investor, because you've done all the work all year round.
Mm-hmm.
So, sorry, go ahead.
Go ahead. No, I'm just saying, I love the idea. Like, a lot of people don't realize as well, that you don't have to keep receipts anymore, really. I mean, not in the physical sense anymore.
Well, you do, you don't. Revenue Canada still does. I mean, software takes a picture of it and it holds in there.
Yeah.
Yes. And you can reprint it if you have to.
Okay. Yeah. But not having the original physical receipt, as long as you have captured it in a software, it's okay now, right? Like,
well, they still, if you talk to Revenue Canada, they will tell you to still keep your receipts. Okay. They do, right? They do recognize cloud-based software.
Okay.
In discussions with them, they do recognize it. They do recognize the receipt is there. So if I had a paper receipt in my hand, I printed one out from let's say QuickBooks, it would look identical, right? Okay, it really would. You wouldn't, except mine would be smaller maybe, and you really wouldn't be able to tell the difference. But in discussions with them, they still say, just in case, keep it. What if something happened with your cloud-based software, right? Mm-hmm. Now, they all do backup. They can be backed up consistently, but to say throw it out, personally, I wouldn't advise that yet. I would wait until Revenue Canada actually states very clearly that if you are using that type of software, then you can get rid of them.
Okay. Well, furthermore, then, in terms of tax paperwork, in terms of your NOAs, your tax returns, all that stuff, how long you should, like, they still recommend you still keep a physical copy, or is a digitized copy sufficient? And if you do have to keep a physical copy, how long do you have to keep it for? Are you aware?
You have to keep it for 6 to 7 years.
Okay.
Your NOAs are all on if you have my CRA account, your NOAs and copies of that are right in there. Okay. So, I mean, if you don't have them, right? But your NOAs are all, most people have my CRA account, which is an account you can set up with Revenue Canada online. And when you go in, there's 2 ones you can do. Is if you have your personal, you can go in and your T4s can be sitting in there when they're released. If you have pension or anything like that, any type of those documents, all of your NOAs will be in there. Okay, your previous notice of assessments you can access through there. If you had child tax benefit payments, GST payments, you can see all of those in your My Account CRA account. If you have a business account, then that's different, right? For corporations, then that's an area where you can file a GST return, you can pay taxes, you can see if you owe federally or provincially once your T2 corporate returns filed, things like that. So in that regards, for saving things, your NOAs are always with Revenue Canada. They have them for you. They are in your account, and it's good to set up one. I always advise people to set one up, right? It's a good communication tool also with Revenue Canada. You can talk to them through there and stuff. And most corporations have their own.
Okay.
Right. So tax returns, people keep them. You can digitize them, right? So you can have them in your drive and for your own records. Lots of people like to keep their tax returns, right? But you should keep them and your paperwork for 6 years.
Okay, perfect. Yeah. Thank you.
Yeah. In case they wanted to go back on you. Yeah.
Diana, I really want to quickly touch on the T776 form and whether or not this is something a bookkeeper can do for you, or if your accountant needs to do it. And one thing I will mention is that, a couple of years ago, Phil and I hosted a course, and we were teaching people the systems and processes we employ to manage investment properties and how we manage portfolios, etc. And we highlighted the necessity for a T776 if you own a property. And I asked the room, I said, how many people in this room know what this document is and filed one last year? And I think maybe one person put their hand up, and it actually might have been Phil. But
that's cheating.
Yeah, I know.
Thanks,
and then
Diana.
You're welcome.
So I asked the room, I said, how many people own a rental property? and I think at least 2/3 of the room put their hand up. And I said, okay, so all of those people that have their hand up right now should know what this form is. So is this something that a bookkeeper can help you with, or is it an accountant that needs to do it? Like, can you explain to people what a T776 form is?
Okay, so that is on a tax proprietor tax return, not on a corporate tax return. Okay, and if they say they don't know what it is, they haven't reviewed their taxes. Okay, so when they get their tax return back, they're not actually looking at it. So if you have a rental property, that is your real estate rental form that's within your tax return. Okay, not all bookkeepers would do them. They have to know taxes, right? They would have to have some backing in them. The forms can also change depending on if you have a partner, if they don't know who your partner is, things like that. So a lot of bookkeepers won't touch them because they don't do taxes. They don't understand that part. And that's fair, right? Not all bookkeepers do tax returns, right? They can be a professional bookkeeper, but it doesn't mean they actually will dive into doing T1s or that, right? So a T776 will basically it will do is it will, on the top of it, it'll give your name and where you live and everything else. It'll say, you have to say what unit it is. So, and it will also say whether or not you are 50% or 100%. You can put that in there. There's also a spot to put your partner, right? So you'll need your partner's name on there. And then it will go along the income. So you would have on it, what will go is how much you collected in rent, right? So let's say you collected $10,000 in the year in rent. Below it gives the expenses that you were allowed, okay? And so you actually want to match those expenses to your books, right? To make sure. So your books can be very, when I do books for real estate, they're quite large in the sense of the expenses, because some people like it really broken out. So I'll give you a little example, like utilities, okay? Some people really like to track the water, the gas, and the electricity, because they do bill back their tenants on certain things. So they want to track whether or not, they're making, they're actually collecting the proper amount, right? Whereas on the tax return, it just says utilities, right? So you would just compress it, right? So on that form shows your mortgage interest, right? Your advertising, any accounting fee if you paid to have it done, repairs and maintenance, right? There is a little spot for vehicle. There's a spot for other, right? Property taxes, things like that. So those on that form is exactly what you are allowed to write off for Revenue Canada. Then on the second page, it does go through CCA. So you can put your building value, okay? And it is good just to note, because I don't want to get into all the tax part of it, but it is good to note the value of the building. And the reason why is that if you change accountants, right, that amount is always on there. So they know, right? So then if you change accountants down the road and you want to do tax planning, they may say, well, okay, here's the value of your building, or things change or whatever, right? So it is important actually just to put it on there. You don't have to depreciate it, but it's just having it on, that form is important. Okay, so a T77, some bookkeepers will do it for you. They'll plug in your numbers and they'll give it to you. So then you can actually hand that to your accountant, right? And that part's already done. He still has to flip it into his accounting software. Okay. There are accounting softwares that are now changing where they can actually plug in your numbers right into your tax return, right? But your bookkeeper would have to, that's another podcast. Your bookkeeper would have to, know all that. But the T77 form is one that anyone who's a proprietor, okay, not incorporated, should be reviewing on their tax return before they sign off on it, right? Because they want to ensure that depending on how many properties you have, if you have 10 properties, usually the accountant will separate each one, right? So that you can track it correctly, right? So those would match your profit and loss out of your books.
I think you hit the nail on the head there at the start of that discussion point when you said that your books should be set up to match. So if you're a real estate investor and you're looking to interview a bookkeeper or ask somebody about their experience, that's a good question right there. Is, look at the T776, see that list of expenses that are claimable, and ask what's claimable on a rental property. And you already knowing if they give you that same answer, well, then maybe you're in the right place.
Yeah. And you can expand on it. Like, I have clients that in the repairs and maintenance, they really do break it out a lot more because they want to know. They want to track, a little bit more detail. And then you just compress it in the books, right? To have that one number, right? And then that's something to also discuss with a good bookkeeper, right? Are you able to track? I want to track, 10 things under my repairs and maintenance. I want to track any plumbing that I do, electrical, and then it doesn't matter why, it's up to you. But the more you can have as much detail as you want in a set of books, right? As long as those expenses are allocated to the correct house. So setting up those costs and allocating them correctly is really important to actually question your bookkeeper also. Do they understand if it's QuickBooks that they can set up as classes, right? Do they understand the classes and do they know how to do that, right? Are they able to produce a cash flow? Do they understand a cash flow statement? Is a good question, right? Because I've had clients ask me, what is the cash flow statement? Like, I don't understand it, right? And so you might want to be able to explain, certain reporting that they're looking for. Right.
Yeah, because it does. Cash flow differs from P&Ls. So profit
it does.
Yeah.
And having a bit of an accounting background helps too, right? That's important so that they can, understand and be able to explain it to you if you aren't sure. If you have new investors, they may not know. And there's, that's why they're learning, right? So to be able to give them, a little bit of understanding better so they can, when they're reading their profit and loss and their cash analysis, they actually understand what they're looking at.
I'd just like to backtrack just quickly. Diana, you mentioned CCA. So I just want to clarify that stands for capital cost allowance for those of you who aren't aware, and just basically another word for depreciation.
Yes.
So those are interchangeable terms in case. Yeah.
But the key thing, going back to what you said, Brad, is if they didn't know what a T776 is, then they're not reviewing their taxes.
So for those people who think that they never filled out a T776, can you get away with a rental property and not fill out T776 when you file your taxes?
No, there's no place. You have to.
So it's been done.
Yeah, their accountant would do it. They may not have. It depends, right? Again, if their accountant gave them a summary of their taxes, you can do a short summary, and didn't print out the entire tax return, then they wouldn't see it, right? On page 1, they would see. That they had rental property or rental income and expenses. You can see that, but they wouldn't maybe see the entire picture if they didn't have the full tax return. That's all. And lots of people don't review them. That's their preference if they don't review them. Right?
Well, the other thing too is if you're doing your own taxes on, say, TurboTax, you're just doing it online. And I mean, it's just so easy to make a mistake. You click on the wrong box or you go next without filling something out. You could potentially skip it altogether. And the other thing too, like sometimes those packages from your accountant can be rather large. It's honestly though, I mean, there's been cases where I've gone through and I've seen something and picked something up and my accountant said, oh, yeah, no problem, I'll change that. Or there's been a time where, you get a question asked, or is this right? And you look at it and you think, oh, I didn't even see that the first time, because there's so much information to look at. Like there really is a lot to look at. So
it's like a small book.
It is. So again, being proactive, right? In getting your books done properly and reviewing your taxes is where you get the bigger picture of where you're at. Very important.
Yeah, so you have an idea where you're supposed to be. So when you get your taxes off, you kind of have an idea what you're going to get back. So then if
and that's tax planning, right?
Mm-hmm.
You can know in advance if you're getting a refund or not. And that those monies, if you have a refund, can be utilized to do other things with, invest or whatever you're going to do. So it is important in the bigger picture, getting your books done in advance of your tax year so that you can actually tax plan, right?
Mm-hmm.
Do you need to buy RSPs? I don't know. Don't know what my numbers are, right? Do you need, or if you have the money, do you want to use it for something else? You don't have those options if you're not getting your books done on a timely fashion and have them, ready so that you can make those good decisions for yourself and for your business.
Mm-hmm. And I mean, from my experience, a lot of investors I talk to, a lot of them don't have bookkeepers, especially when you're first starting out. Like I know when I first started, I didn't have a bookkeeper for the first couple of years, and then realizing just how detrimental that was once I discovered a bookkeeper. But the thing is, you don't know what you don't know. So when would you say it's a good time to start having a bookkeeper? Like right at the beginning, after you have 1 or 2 properties, 3 or 4?
Well, it depends on the person too, right? I mean, someone who may have 1 property may feel that they want to do it because they want to learn themselves. They want to understand what they're, what's going on. I think when you start to get more, especially, or even 1, I shouldn't say that, but even just 1, if you're very unsure, you might want to hire a bookkeeper. You can also hire a bookkeeper to consult, right? And give you some guidance. But I think if you're working job and trying to do your investments and that, you may find it gets quite overwhelming. And as you said earlier, come tax time, oh my gosh, you're spending hours and hours and hours trying to get your stuff together. And that's where you can make mistakes and miss things, right? You can miss those receipts. So having 1 house, yes, you may want to have a bookkeeper if you just don't have the time and the knowledge, right? That's important because you want to start out right. I've had people where we've had Excel sheets, right? And we've had to put Excel sheets all into a company. And now they're like, oh my gosh, why didn't I do this sooner? Right? Because now it's so lickety split every month. Everything's in there neat and tidy.
Instead of
right?
the month from hell at the end of the year.
Well, why would you put yourself through that? Yeah. And especially if you're buying more properties too, the more you accumulate, the more work it is if you're doing it yourself. Right. And if you're still doing it on Excel sheets, the more work it is for your accountant.
And I think something to think about too is the opportunity cost, right, of doing your books versus some other higher value activity that you could be doing instead.
Very much so.
Like hunting for investors or spending time with your family, or just
the time value is
just relaxing.
Yeah, but the time value is huge. It
Yes,
really is.
absolutely.
What do you value your time is worth? Really, right? Like, what do you value your time is worth? And if you very much value, as you said, time with your family, investing, traveling soon, we hope, right?
Soon.
Then, you can't if you have to have all these books done, right? Especially close to the end of the year. Do you want to be doing all your numbers or spending time with your family at Christmas? Right? Like there's different things you have to sort of sit down and it's personal too, right? What works for you. But I find with most people, they are relieved is a good word to say. Once they know everything's up and running and they're just, they say it's very easy, and they're in their books all the time. They're very proactive, right? You want to be proactive. It's your company, it's your books. You want to know what's going on and understand it. And a good bookkeeper can explain that to you and work with you. You're working together, right? You're always working together to try and help them.
Yeah, I think there's merit in, like Phil said, there's merit in wanting to learn, but also I just think you can skip so much by just working with a good bookkeeper from the beginning, and you'll learn the right way from the start, and you'll save yourself so much grief and stress. Honestly, like it's not even worth it, to be fair. Like, because seriously, because by the time you get down the road, you've got so much stuff to go back and fix or catch up on. Like, you're better off starting on the right foot at the beginning.
I agree. I mean, from personal experience, I realized that. I mean, I was doing my books, I know, until I got to a point where this became a little bit overwhelming at the end of the year or end of every month. But then after I handed it off to you, Dan, I realized that I was doing everything a little bit wrong anyways. So
well, you were doing it your way. You were doing it your way.
Yeah, I mean, it could have been a lot better. It wasn't as clean cut as it could have been.
Yeah.
And
now it's
now it's beautiful. And really, I mean, I went from having to spend a couple hours every month keeping track of my books to, I think I timed myself just how long exactly it takes to organize everything every month. 20 minutes.
That's a big difference.
20 minutes once a month. That's it. So yeah, no, it's
There is a
beautiful.
big difference, right?
It
So
is a huge difference.
imagine when
Yeah.
you have more properties, right? And
Mhm.
and you know, you're like, okay, well, and like I say, a lot of these integration packages do it for you, right? You can forward your receipts, you can forward your emails with attachments, things like that. So once it's set up, there are a lot of things that can be done and automated, right?
Mhm.
So it lessens your time even more, so that you can be out looking for new deals or spending time with your family, whatever it is.
And the best thing is it always improves, keeps improving. The software keeps improving too. So it's
It sure does. Like the
uh,
stuff that's coming out now, like the time billing and just everything you can use, sending your if your tenant says, oh, I would like, my receipts, can you send me a summary of all my receipts for 2020? Sure, done. Right. And you can email it right out of the system. So, that you don't even have to do it. Your bookkeeper will do it. Just say, can Joe Smith would like his receipts, what rent he paid for 2020. Okay. It takes like no time. But if you had to do it manually, you have to write out a receipt for every single month that you did for them. Right. But think about it, right? If they wanted that, you can, if the rent comes in, you can send them a paid receipt. If they want that every month, it comes right out of your system. Right. And that can actually be set up automatically. Right. So there are a lot of things that can happen when you do switch to, an accounting software, that you can work with your bookkeeper on automation. Right.
mhm. All right.
Yeah.
Fantastic. Well, this has been really, really informative. I hope any real estate investors or new investors listening to this really get some good takeaways, because
Mhm.
from personal experience, and I know I speak for both of us, Phil, bookkeeping was a revelation for us in terms of
Well, I mean, I understand it from a new real estate investor's point of view, right? Because we were all there, and when you have one property, it's tough because you're just trying to save costs, right? You're trying to cut costs, you're trying to save money, and then you're like, is a bookkeeper really worthwhile? Just because it doesn't take me that long to do one property, and yes, you're learning a little bit along the way, but I mean, sure, I think you can maybe get away with one property. Like if you're, to be fair, you should be able to get away with one property. Once you get in 2, 3, 4, it just gets to the point where it's really, especially if you want to grow your portfolio, if you want to grow your business, that time would be so much better spent trying to track leads, establish relationships, as opposed to data entry, essentially, right?
Yeah.
So yes, I agree with you, Brad. It's been revelatory. It's been like, I will never go back to ever do my own books again.
Are you sure?
Yeah, no, I would.
I'm sure. Yeah, it does. It makes a difference, right? I see working with clients just how happy they are.
Mhm.
I think it's that sense of relief I love to see, right? They're like, oh, wow, this is great, right? They don't have that stress time during taxes,
Mhm.
right? They really don't. It's just, after their December is compiled, their whole year is done, you can give them their statements, and then they're like, okay, good, go do my taxes,
Yeah.
right?
It's just another side of the fence you just don't see until you cross over, unfortunately.
Yeah.
So a lot of times it's really just a leap of faith, because you just don't know what the difference really is until you actually see the difference. And it's hard to explain to someone who's never done it, because it just doesn't, it's.
Yeah. But you know what too, I would say talk to different bookkeepers, right? Get a perspective and see what they will do for you, right? You do need to talk to different ones to find out what exactly are they going to do for you, right? And you may decide, okay, maybe it's not what I want to do right at this moment, if, as you say, you had one property, but you do need to talk to a few different ones and make your decision, right? But you'll find, I think, the bigger you get and the more you do, it makes everything else in your business so much easier, right?
Agreed.
It really does. And it's more efficient for timing, for taxes, if you have JV partners. I mean, you have to give them statements. So as you said, or Brad did, you can't give them an Excel sheet, right? And say, here you go, this is what we did, right? It's not professional. And if you're looking to have more investors work with you, you have to be able to produce them some management reports on a quarterly basis.
Yeah, no,
Awesome.
agreed. Well, thanks again, Diana, for taking the time today to join us on the podcast. And
Oh, you're very welcome.
That was awesome. Thank you.
You're welcome.
yeah, we appreciate it.
Okay, good. Have a nice evening.
You as well.
Thank you.
Hey everyone. So one of the most awesome things about See Who, other than being able to create awesome content for you guys every week, is our associate program. The difference with our program is hands-on investing experience. So every year, we and a small group of students take a sum of money and purchase an investment property that we teach you how to operate. So all our students learn how to operate a successful cash flowing investment property, how to do a joint venture, and everyone leaves the program as an equity owner in the investment property we purchased. This is important, so I want to say it again. You leave the program as an owner of a real investment property with all the knowledge you need to know to do it again, and we'll be with you every step of the way. Last year's program was a huge success with an amazing investment property, and we want this year to be even better. We have a few spots left for this year's program starting in February, and we'd love for you to join us. If you're interested, please reach out to us at hello@cwho.ca or phil@cwho.ca. See you soon.
Thank you for listening to the Commonwealth Home Ownership Podcast. Be sure to check out all of our past episodes and our ever-growing library of content at cwho.ca. Until next time, remember to get out there, take action, and create a life of wealth by design.